All right, Rob, are you there?
I'm here.
Hey, sorry about that delay. Obviously, there's a few issues there, and Scott wanted to get in his piece real fast for everybody, just give the update. But I obviously want to thank you for joining us, and I know there's a couple of names that you got on your radar here, some recent earnings, and companies that are reacting relatively well to these earnings too. Wouldn't you say?
I would. Actually, the first one I wanted to talk about was Yelp. It's just been it's up like 28% today after reporting Q2 earnings yesterday, and they've kind of done a pretty fundamental change in their business model. So I just wanted to highlight this name just real quick. I'm not going to spend so much time on the numbers because actually the numbers weren't that big of a beat. The main thing is they're switching their advertising billing policy. They used to require customers to sign a 12-month contract. Now they're switching to a no non-term contract. So basically it's month to month. So like for example, if you own like a flower shop and you wanted to attract Yelp users to your store, and you used to have to buy a full 12 months of ads on their platform before you could even go on their platform. They've changed that. Now they're basically allowing you can come in, you can even do a free trial, you could do it for a month or two, then you can get off of it if you don't think it's like getting your return on your investment. So it's really, it doesn't sound like a big change, but it really is a huge change in terms of...
Let me ask you this, Rob.
Sure.
It sounds like that could potentially lead to some lumpiness and seasonality, right? Like with people probably advertise it a little bit more around the holiday season and stuff. Do you think that'll be something different for analysts?
Yeah, and that's I do, and that's a concern for investors. There's also the concern of just it will create a lot of more customer churn because you're going to have people come on, come off, come on, come off. So it's going to create a lot more churn. But in today's report, they were really confident about it. Basically, yeah, they have seen an uptick in churn, but they've also seen a massive amount of volume of new customers coming online to the platform, and that actually, the benefit of that is actually outweighing the negative of the churn and the potential seasonality later in the year. But
now for the accounting for that, say I advertise in January and February, and then I leave and I come back in July. Am I considered a new customer?
Probably not at that point. It's probably when you first come in. It might be like a rule where if you don't advertise for maybe like 60 days, then they're considered you a new customer again. I'm not really exactly sure how they would handle that, but
right.
But it's definitely, and the other nice thing about it is not only do you get more smaller customers to try it, but you also get them in the ecosystem. So let's say that flower shop does it for a couple months and then cancels it. They can market directly to that flower shop in April, May, June, and try to get them back on the service, where before they did that, they didn't have that sort of close connection with them. They weren't in the Yelp ecosystem before. So basically, even just doing a couple months gets them into sort of their database of potential customers that they can specifically market, maybe send deals to try to get them back on their platform. So they see a benefit on that side as well. But
is there a higher pricing power and margins with shorter term too?
You know what they say? It's pretty similar. They said the contribution margin is actually pretty consistent with the longer term, because they basically use like a variable commission structure. So they probably charge more commissions if you're doing fewer ads. But they said that the margins are pretty similar, which I was kind of surprised to hear that. But that's what they said in the call. Last night. So it was definitely, so basically the stock's up today. It's mainly on, it's not so much on the numbers or the guidance, it's more on, hey, this non-term thing is not going to be a problem. That's kind of the message that Yelp was giving out today. So it was definitely a positive for the stock. And it's funny. I'm sorry, go ahead.
No, I was going to say, yeah, I mean, just looking at the reaction to it, certainly squeezed above a couple of key resistance levels. And if anybody's curious, this is a 77 million float with about 7% short interest. So wouldn't be looking at this as purely a squeeze here. Does valuation...
they do trade at a high valuation. I think they're earning like probably in the 40 PE range, which is very high.
67 for it.
Or is it 67? Okay, I don't have it in front of me. So it's definitely high. But you know what's funny is I kind of, in my mind, I've always sort of lumped Grubhub and Yelp together, and it's funny because Grubhub, that stock's been doing really well over the last year, just up and up and up and up, and then Yelp has been kind of going sideways, and then it's actually been kind of coming down. But this non-term thing might be just a catalyst to get it back going back on the upswing again. So, it's definitely a name to watch. But it's just one quarter, but to see how the second half of the year goes. But it was definitely a good start.
Okay, and again, just going back with the modeling for analysts, obviously a little bit more difficult given this new model. Are you going to kind of, not, I wouldn't say discount results, but at least discount results compared to analysts? What metrics are you going to be following here to kind of judge the health of the company?
Definitely new customers. I'm going to see if they can, because actually Q3 will be their first full quarter with the full non-term implemented, because it actually was just implemented starting in, I think around mid-May, so it's only half of this quarter was actually with the new non-term business model. So Q3 will be a good test, because that's the first quarter that's full 100% will be in the non-term methodology. So hopefully they'll continue to do well then. And just another quick thing on this one is that adjusted EBITDA is an important metric with them. For some reason, they don't report the non-GAAP EPS number, so it's always a little confusing around earnings. You basically just have to go off of revenue and then adjusted EBITDA, and which was actually quite strong this quarter as well. So that's just another metric to keep an eye on. And also churn. The churn is another, because churn, it might creep up, later this year. We'll see. The management did say that churn wasn't an issue, but that might be something to kind of keep an eye on going forward to see if that is the case as this kind of gets rolled out over the next few months or so.
All right. And another name that you had on your list here, another pretty good quarter, and another one that looks like it's going through a little bit of a model change, just one on its pricing strategy, and that is Etsy, which I think I just saw that it had a fresh 52-week high here on our site.
I did. I think it popped on the earnings and then it pulled back. So I think earlier in the week it might have had a new 52-week high. But
okay. So what do you like about Etsy here?
Again, you kind of stole my thunder a little bit, but another big thing is another big model change in terms of pricing is with Etsy. Their transaction fee. So this will be just a step back real quick. It's an online marketplace where you can buy and sell unique goods. What's interesting about it is it's like handmade goods, arts and crafts, vintage stuff. So basically, it's one of a kind things that you can't find anywhere else. So Etsy is kind of the only, like, the biggest platform in this space. But anyway, they do. They just made They also made a big model change where they went from 3.5% transaction fee to 5% that they charge sellers when they actually sell something on their platform. It doesn't sound like much, 3.5 to 5, but it's almost like if you do the numbers, I mean, that's a big. That's a 42% increase in the transaction fee. So that's just all extra. That's high margin sales, because basically the costs are the same, but now they're just charging more for the transaction fee. So those are some really high margin dollars that are going to come rolling in. Etsy does promise to spend a lot of that back in the business in terms of advertising and working on things to get like payment processing better, and they're working on their search capabilities, things like that. But it was definitely a good sign. And in this quarter, this was the first quarter where they implemented this new transaction fee. I think it went into effect in mid-July or something. And they said there have been, what did they actually say? There have been like pockets of discontent was the actual word they used on the call. But they said in general, sellers can't get it, and they're not really pushing back on the price increase too much. So that was definitely a good sign. So there's. It's not so much the numbers that stock popped on earnings. It's more on the sentiment that this pricing model should probably roll out pretty successfully over the next few months into 2019. So there should be some nice extra revenue for them.
And I know that you'd put together a nice story stock on them for anybody interested. It's in our archive, so I highly recommend checking out Rob's piece on that. You had mentioned FX headwinds being an impact. Now, I didn't realize that they were even international. Do they have a good international footprint here?
They do. I think it's about a third is international, and I think it might eventually get up to 50% or so. They do have quite a bit of international exposure, and that actually might even increase more because they just bought this thing called DaWanda, which is sort of like it's a Germany-based platform that's very similar to Etsy. So they're probably going to get more sales in Europe. So that FX might be a bit of an issue. But so they did miss on the EPS line, but they stress that it's mostly because of foreign exchange issues, not so much, sales or demand. It's basically just, a currency issue. So investors kind of just didn't bat an eye towards it. They were more focused on, the top line number, and then also on just the commentary that the pricing strategy went well. So that's what people are focusing on.
Right, and as a growth strategy, they could get away with some of the spend, like you were saying, that they're planning on doing, and therefore you want to continue to focus on the top line growth here. Yeah,
definitely. And again, also adjusted EBITDA is also important for them. So those two things, and and I'd like to see if there's, if they do mention like there's more, like if they had seen some sort of reduction in sellers in the second half of the year, once the higher fees get put into place. I mean, hopefully they're, everything's going fine with the sellers. We just never know. Probably this coming up holiday season in Q4 will probably be the big test for them to see if sellers are actually hanging in on the platform, which I'm kind of assuming that they will, but time will tell.
Okay. Well, we looked at two pretty good-looking names here. Mm-hmm. Now it's time to look at one that didn't do so well this earnings season, and that would be Zillow. We'll look at the ZG ticker on that one. Mm-hmm. Stock obviously got chopped down. A lot of people were focusing on that Q3 guidance. You want to run us through what the report and kind of what some of the weaknesses were there?
Yeah, see, the main thing is they had a couple of things. They had earnings. They also announced a big acquisition. They announced they acquired they're going to acquire Mortgage Lenders of America, which is a national mortgage lender. So they're actually getting deeper and deeper into the actual purchasing of homes. Earlier this year they rolled out Zillow Offers or Zillow Home. I'm not exactly sure what they call it, but basically what they do is if you're trying to get out of your house, they'll buy it from you for cash. It's probably not the highest price, but it's very convenient for sellers who they might already have a contract on their new home, their bigger home, and they just need out on this one because maybe their down payment's tied up in it, or they just don't want to deal with selling it. So Zillow will come in and actually purchase the house. Then typically they'll renovate it, turn it around, and then put it back on the market within 2 or 3 months or so. And that's the segment that actually is why the guidance was so poor. They took down their Q3 and full year revenue guidance by a pretty significant amount. And the main reason is that this home segment is basically sellers are not turning the keys over to them as quickly as they thought. They thought it'd be like 2 or 3 days, but it's turning out to be like a month, maybe 6-8 weeks.
Is this something that they're going to have to track them down? Because I did see something about that they felt comfortable with it, but is this kind of a bad creditor?
No, I don't think that's the issue. I think it's more just I think the sellers just want to keep their options open. It's sort of like if you sell your car through CarMax, you get 7 days. They'll give you an offer, and then you have 7 days to come back and actually hand the car over and get the money. After that, the offer expires. I think it's the same with Zillow. Is they probably give you an offer for 30 days that at any time you can just sell your house at that price, but they might try to go out and sell it on their own, so they might just see if they can get any offers while that 30 days is expiring, and then after the 30 days, then they might just go to Zillow and just sell it, depending on how their circumstances are. But the problem is that Zillow kind of underestimated how long this process would take. So that's delaying the renovation, it's delaying the amount of when Zillow can put the house back on the market for resale. So it's kind of pushing everything back. They said it's not really affecting volume or demand, it's just affecting timing. So they're saying that this revenue will be coming. They said the revenue expectations are pretty much what they had expected, but it's just going to come a little later than they thought. So, and I think that kind of took people by surprise. So that's the main reason why the stock's down today. And I don't think it's so much in purchasing a mortgage lender is another, like, I think investors kind of want to wrap their brain around that.
With risk.
Well, they keep going down and down the funnel because they used to be just a lead generator, and then now they're buying homes, and now they're buying a mortgage lender. Pretty soon they're going to be a REIT. They go more and more down the funnel, which I kind of think makes sense because they,
do you think they'll move towards a REIT?
No, I don't. I'm just kind of being facetious there, but I think they just seem like they're getting more.
They're not far off if they're all of a sudden buying houses and stuff, right?
But see, part of the problem is when they started buying houses, and then there was one point they got into where they were competing with Redfin, and they're actually charging commissions. So a lot of their clients don't like that because a lot of their clients are real estate brokers. So now they're competing with them, and now they're buying a mortgage lender. Well, a lot of their advertisers on their site are mortgage lenders. So people are afraid that might upset them because, are they going to favor their own mortgage lender over other mortgage lenders on their website? So it's kind of, people are kind of see how this all is going to shake out, but I think it's just, I think so. It's this also the model it's changing. They're not just simply a lead generator anymore. They're now getting involved. They're basically now becoming a real estate company, which is a completely different animal, and the valuations are different. The cash flow is different. So I think people are getting a little bit, nervous about that, and just want to kind of see how it shakes out. And then when they lowered guidance so much for Q3 and second half, I think that kind of really spooked people. At the same time, buying a mortgage lender. So, but it just in my quick take, I think that the sell-off seems a little overdone to me. It just got hammered. It just seems a little overdone to me. That's just my quick.
A little too aggressive, a little too conservative on the part of shareholders.
Yeah, I kind of liked how their model is going to turn out. Time will tell in the second half of the year. We'll kind of see how it all comes together. But the sell-off just seems a little aggressive to me. But I guess we'll see what happens. But
all right. So we're going to start moving towards the end of the day, and I'll be going through Scott with a couple of earnings, but I do believe that there's a recent IPO that's going to be reporting earnings that you have particular interest in, Rob, and that's AVLR is the ticker. Just popped it up on the page for everybody of Elara Inc. You want to run us through and what they do? Just an interesting business model.
Sure. Just real quick. Basically, what they do is they sell cloud software where if you're like an online retailer and you sell all throughout the country, you might have some customers in Maine, another one in Minnesota, another one in Florida, another one in Arizona. Their software program makes it easier so you know exactly how much sales tax to charge each customer for whatever they purchase. And different products have different tax rates, and there's a lot of complexity all throughout the country. And basically, Evolara has a software program where it simplifies everything. So it's updated constantly, and like if Florida increases their sales tax from 4.5% to 4.75%, it automatically gets adjusted. So basically, the companies don't need to track all this stuff. This software platform helps them do it. And the company got a huge boost from the Supreme Court in June. The stock popped on this. Is that basically they're allowing states can now charge online retailers tax, because for a lot of states they weren't able to charge sales tax. It was across state lines, and now the Supreme Court is saying that yes, they can. They can charge even if it's even if the online company doesn't have a presence in that state, they can still charge state tax. It used to be, well, there's no physical presence in Minnesota, so you can't charge us tax if we sell something in Minnesota. But now the Supreme Court said, yeah, we can. Those states can now levy taxes on basically all the states. So basically, that's going to probably lead to a lot more, especially online retailers, using more and more of this a service like Evolara. So it was a nice little tailwind for them. But so we'll see how the earnings come out. And there's really nothing. It's hard to really know what to expect. This is their first quarter. Typically, the first quarter after an IPO, they tend to blow it out. Usually, that's not always the case because analysts kind of keep their numbers low because they want a big beat and raise. The first quarter is really important. If you miss that first quarter, it just really hurts the stock. It really makes investors questioned the competence of management because they just wanted a huge roadshow and they gave all their numbers to all these analysts, and then they just messed up like 2 months later. It doesn't go over well. So basically, they usually want to see that big blowout. And usually analysts will kind of keep their numbers on the lower end, so they kind of make it hurt a little bit easier for a company to have a big quarter in their first quarter. So anyways, that's another thing just to keep in mind with Avalara tonight. So we'll see what happens.
Any particular metrics you're watching?
Not really. I mean, they're not profitable. They're not close to profitability. Just the top line revenue. I'd also like to just get any color from them on that Supreme Court thing, because that was kind of a big deal. It really made the stock move. So any sort of follow-up from them on that, I think, would be important. But I don't have any particular metrics other than that. So, and again, I'm not as familiar with them as their first quarter. I'm not really sure what metrics they're going to provide. It'll kind of be a learning experience for me as well. So we'll see what happens.
All right, fantastic. Well, Rob, definitely always appreciate you coming in and joining us, giving some insight from your world over there. I know you're on the much more longer-term investment horizon, but everyone's always looking for ideas on both sides. So, I know we certainly appreciate you going through some of these recent earnings and names that a lot of people are asking questions about, as well as that little preview on AVLR, because new IPOs are certainly always of interest. So
they certainly are.
Yeah, so we'll be pulling you back in next week again, hopefully.
Sounds good. I'm going to get ready for the close here. So.
Yeah, I know we all got a bunch of earnings to post here. It's getting towards the end of this earnings season at least, right? But I will be talking to you shortly then, my man.
Sounds good. Thank you. Take care.
Okay, take care. All right, so thanks very much to Robert Reed with coming here and joining us. Always great to get his insight. He really breaks down these companies and goes through the different business models. So always interesting to hear his take on some of these hotter names that are out in the markets. Want to jump ahead now and take a look at the day ahead. We'll be pulling Scott back in here shortly to do a little bit of a speed round on some of these earners coming out. But first wanted to take a look at the macro, and with that, I think you have to take keep your eye out here on the euro, which is breaking down. I got on and talked about it a little bit earlier in the week, and one other thing too, just noticing Juniper breaking out. That was, of course, one of Rob's favorites, JNPR, but this euro here, it's dipping below that 115.50 area that we were talking about, which is a key support level. Going to pop up. Don't have futures data on our charts here, but we do have the FXE, which is, of course, the ETF that tracks the euro, and this will give you a bit of an idea of what we're looking at with this breakdown. We'll change it over into the weekly, and you can see how important it is for that euro to hold that 115.50 area. Talked a little bit about the comments from Chicago Fed President Evans earlier, talking about the need to make policy a little bit more restrictive, and that's helped provide a boost to the dollar, which is pushing up towards that 95.50 area. We're noting that the dollar holds most of arguably the most interesting aspect of this macro market right now, and a push higher could certainly be of interest. Put a little bit of pressure on the commodities here potentially. So don't want to call it a breakout yet, but with that CPI number on deck, something to keep an eye out on. And a quick run around the macro, and then we'll pull Scott in. On the U.S. side, as I've been saying, that CPI number is clearly the key item to keep an eye out on. Current expectations for the July number for both core and headline are plus 0.2%. And then we're going to get the Treasury budget at 2 p.m. So it's CPI and CPI all day tomorrow on the macro side. Looking on the international side, tonight we're going to get some more data out of China with its money supply and new yuan loans. The new yuan loans are expected to come in at about 1.2 trillion, and that's in yuan. So I want to keep an eye on that. That would be the second big number in a row for that if it does come in higher than expected. In addition, Japan's got a pretty busy day. We got their Q2 GDP prelim, which is expected to increase at 0.3% quarter over quarter, and PPI numbers also expected to increase, and they are 2.9% year over year for the expectations. We'll also get the latest Reserve Bank of Australia minutes at 9:30 p.m. Want to just keep an eye out on that to see any sort of potential changes there, or any color around the Asia-Pacific area, especially with China in mind. In France, the latest industrial production and private payroll numbers are due out at 2:45 a.m., and that will be followed by Italy, who will be posting a trade balance, which is looking for a surplus of approximately euro 3.4 billion. Then the UK, they arguably will be the busiest country tomorrow morning on the macro front, with a preliminary look at the Q2 GDP, which is expected to increase 0.4% quarter over quarter, and we'll also be getting their manufacturing and industrial production numbers, as well as the NISR GDP number. This is a month-over-month figure. And finally, Canada, we'll get Canada's job numbers at 8:30 a.m. Tomorrow morning, and that is what we're looking at on the macro side. But clearing away U.S. CPI numbers and the Chinese new yuan loans, as well as those GDP numbers out of Japan and the UK, will be key. So, Scott, I hear you popping on here. Are you ready to go?
I am ready. Let's go.
All right, hold on real quick. Just getting a headline on that the Department of Justice made clear that Rockwell UTX deal, so we'll keep an eye on those two stocks.
Which ones? ROK and what?
ROK and UTX.
And United. Oh.
Oh, yeah, it looks like they're getting clearance from the DOJ. Expected early next month is what the story is saying, so that's one area that we want to keep an eye out on. Scott, while I got you here, first name that we'll take a look at was the one that Robert was just mentioning. That's AVLR. They were a big beneficiary of that tax ruling on e-commerce interstate tax. Basically, this is a software company that helps smaller companies manage their tax issues, which are getting more confusing. One would think for the e-commerce side of things. Stock priced its IPO around 24, would eventually rip up to that 55 after opening up at 35. Recently pulled back and is seen once again pulled back to that 37 level and is now bouncing back ahead of earnings. Does that bounce back ahead of earnings kind of take it off your list?
No, it's there. I'd just like to see how it responds. You know, if it can make a push above where it's currently trading, above that 45 resistance level that's been in effect here the last couple of weeks. If it continues to maintain, this is one that I might jump on board. You know, as it continues to trend higher. So.
All right. Next one up. We talked about this one briefly. We'll go a little bit quicker on this for more speed round style. But Dropbox, ticker symbol DBX. It's seen some buying in front of earnings. Obviously, people are looking for a pretty solid print here. They do guide on their call. I would note 54 million float and 16% of it short. So keep that in mind. I wouldn't be looking to short it, but potential breakout here and maybe moving back towards that 40 if they could produce the numbers people are hoping for.
Yeah, I don't have much of an opinion on it. This is heavy buying today. 12 million shares, well above the average trading volume that's been going on. Usually it trades about 2 to 3 million, so 4 times average daily volume going on here ahead of earnings, which is, I don't know what to make of that one. I'll just step aside and see how it responds.
All right. Up next, a name that I know trend is long in, and I really like it. The Lionsgate Entertainment. We'll go with the A shares, the LGF.A ticker. And, coming back in to test around these 52-week lows at the moment. One of the things, the biggest argument I think on trend side is that, everyone's searching for content. We always hear about the high cost of content, and that really puts Lionsgate squarely in the potential for M&A activity here. It's certainly been mentioned by a lot of analysts. Personally, for me, I wouldn't mind seeing it miss and just getting a little bit of a flush for an entry, but I'd be perfectly content with entering here. I like this name, and I like the theme that he's got on it. Scott, from a chart perspective, do you have the same enthusiasm, or are you a little bit more cautious given it's near that 52-week low?
Yeah, I'm a lot more cautious. I'm on board with Trend. Usually 90% of his ideas, this is one of them that I just can't jump on board with based upon the price action in the chart here. I much rather own something like an AMC that's paying a 4% dividend yield rather than Lionsgate. I know they're two separate things, movie theaters and production and stuff, but not a fan of LGF right here.
Right. Okay. Next up, we're going to go with Overstock, OSTK. This is an interesting one because it's really should be an e-commerce play, but it really just trends more with Bitcoin because they've been one of at the forefront of the exchanges with this T0, formerly called their Medici product, and a name that I really liked at the beginning of 2017 and had a big run, but since has really pulled back is, obviously with Bitcoin too, you can pretty much track it. I don't know what the correlation is there, but I would assume it's pretty tight, and obviously Bitcoin's been trading pretty similar to what Overstock's chart's been doing, but now it's just kind of winding into that tight consolidation pattern here, Scott. Basically between 36 and 40 for the last 3 weeks, heading into earnings. Earnings have not been kind to it simply because its e-commerce platform has not been performing all that well. But what do you think when you're looking at a chart like this?
You got 20 million shares and a short interest of around 40%. So there is a lot of potential for this thing to just rip over $40 on any sort of positive headline. Even probably just a mediocre headline can get this thing going and ripping right over $40. So technically that's what you're watching out for. It's got to start getting into the 40s, and then you get some massive upside squeezing going on. Otherwise, I don't know anybody that uses the site. I've never been to the site. I'm not sure what they're doing with this blockchain stuff. Go figure. But the market's just kind of doing what it's doing. It's not really participating in it.
Hey, Scott, just a heads up for people. There's some late day selling going on. Seems to be a lot of concern around Israel and some warning signs going off. For me, I think this is just people trying to take advantage of some light volume. We haven't been able to get above 2860, and stuff going wrong in Israel is always something that you can throw out there, and people are going to figure, it's got to be happening. So I really think it's just people trying to shake out the market here. As long as we hold this 2850 level, I would just look at this as noise. And again, we're getting into August. Expect a lot of this. That's my early take on this late selling here. I wouldn't be overly concerned about it. At the end of the day, we're down 4 points right now. I know Brett's mentioned it a couple of times. We haven't been able to get above 2860. If you got in long for a breakout and you haven't seen anything, chances are you'd probably sell on something along these lines, and I think that's the majority of these sellers. As long as 2850 holds, I don't think you really worry too much about it. So moving back, we got Redfin. No Tech T's been a fan of it. I'm still long this in my portfolio. I think some of those Zillow results have people concerned, but I think that Rob Reed just took us through that Zillow report and explained some of the issues going on, which were certainly more company specific. Stock's sitting right at its 200-day moving average ahead of tonight's print. You got any thoughts on Redfin, Scott?
None at all. It's been going sideways for months. I have no opinion.
Sideways is not bad, though, if it can produce a nice result, though, right?
I guess it's trading exactly where it was 6 months ago, 8 months ago, so it is what it is. We'll see.
Okay. Then we're going to go to another one of Trend Tracker's favorites, one that he's done pretty well in, and I believe he's made our subs a lot of money in too, which is always nice. This is the Trade Desk. We saw Roku on that OTT space just really see a boost here. TTD does a lot of advertising for the streaming TV services and really had a nice blowout quarter. Stock's up about 75-80% since that report, and really has held up pretty well. under all this selling. So, Scott, I know that you've played around with TTD at all. Do you have a preference on this name at these levels here?
Not right now at this level, but I wouldn't be surprised if this thing jumps up to the $100 mark on a positive earnings report. It doesn't look like it's a hard feat to accomplish. If it does disappoint, I would say, you got to watch those recent support levels around $84, $85. So.
All right. Here's one that I was finding interesting from the long side, if they could provide that nice quarter, and that, of course, always remains to be seen. But Universal Display Corp, ticker symbol OLED, down 40% year to date. LCD panel provider here. There's certainly been some concerns in the industry, as evident by the move. But, been able to hold that 100 level here. And again, if it can make a push higher, I see this one getting back towards that 200 in the 126 area potentially.
Yeah, it could be a turnaround play for sure, especially like you said, down 40% off the year-to-date highs. Could be a potential turnaround play. It'd be nice to see some upside in that one.
Okay, and real quick, seen some reports about a ceasefire. Again, I just think it's people trying to get people excited and create volatility. We talked about this with some of the stocks. People get antsy, they don't see things moving, and they start floating out these headlines just trying to kind of nudge the bear and get things moving. And you want to avoid getting caught up in this white noise. It's simply low volume, not a lot of people on the desk right here, and people trying to take advantage of that via some headlines. So I've been seeing it. I've been on the desk for 15 years, and I've seen it time and time again. So don't overreact to these moves that seem big just because everything's been dead for so long.
Yeah, hey, let me just say something real quick. So I'm seeing this might be a feedback, but if anybody takes my trades and they're not adhering to the risk parameters that I put out there, and they're panicking every time price action gets $1 or $2 against us, do yourself a favor and get out of the position. Clearly, you took on too much size, too much risk. You didn't manage the trade properly, and I mean that with all sincerity. I don't mean to sound like a jerk of sorts. Cut your losses short and move on to the next winning trade. So no reason to sit there and panic when the losses are part of this game. So if something is coming down to our $2 risk level or $3 risk level, don't send feedback saying, what am I doing? I'm gonna get out of the stock when that risk parameter gets met. So because that's the plan, and that's part of the game. So that's basically it. So if you're new to the service, definitely adhere to the discipline that we present out there.
Did you have a comment one time, Scott, that you never take a trade if you can't fall asleep at night?
Well, that's exactly it too.
Something along those lines.
I've always said that. I never take on. I'm not making big bets here. I don't sit here to try to become a millionaire overnight. This is a long journey. I've been doing this for 20 years, and I plan on doing it for another 20, 30 years. I'm just not looking to become, rich overnight. The few times that I've exceeded my risk parameters and where I felt uncomfortable, I've been miserable. I've been wrong. It hurts. It's painful. I just don't like that experience or that feeling. So for me, it's always hey, I have a plan. I have a size. I'm going to adhere to it. Yes, I am wrong. Some of the time, fortunately, I am right more than I am wrong. But again, losses are part of the game, and if price actually comes down to it, and it's still within our risk parameter, I don't panic out of it. But if you're panicking, you need to get out without constantly writing in feedback. So, and again, I mean that in all sincerity. Take that with, as a learning lesson of sorts.
All right. Well, I'll tell you what, Scott. It looks like TTD's out. Let's take a quick look. I'm going to have to jump over and give these guys a hand here and get some of these earnings up. TTD initial response looks pretty positive, ready to go towards that 100 level. Can't imagine it's not going to kiss that level when it gets this close, right?
Yeah, that's a strong stock, and like we've said before, Trend Tracker is just fantastic at uncovering these strong growth names with lots of potential. No surprise that that's just gapping up there and having a nice reaction to earnings.
All right, I'll be back on. Scott, you going to take people home here?
Really not much to say. That's gonna just, like you just said, the stock market came back in here into the close for whatever reason. The market really wasn't doing that much overall to begin with. The advanced decline line wasn't doing anything today. Just sitting in a mildly bullish tone and slumping throughout the afternoon. Up-down volume ratio wasn't doing anything either. So yeah, it's just one of those days. We're entering the dog days of summer here. You know, they get even worse in later half of August when earnings season dies down. So do yourself a favor. You know, even though we're throwing out trades there, you got to take everything with a grain of salt here. This is just these conditions are not ideal. You can tell from the silence on our trader audio just this week alone that there's just not a lot of opportunity there. You don't want to be forcing things or taking large risks. Just the amount of trades in our site, they died down significantly after the first hour. There's just not a whole lot to do there. Don't be pressing too hard here at under these types of conditions.